Welcome back to the channel, everyone. It's me, Adam, and I was just watching a video on YouTube called "The Global Chip Shortage Will Probably Hit Your Everyday Life." It was uploaded by CNBC International on October 8th, 2021, which was just a few days ago. And I totally recommend anyone that has a chance to watch it because it gives a pretty good overview of what's been happening, why it's been happening, which sectors have been hit the worst, and when it's expected to pretty much finish. So I totally recommend watching this one, guys. There's some pretty good analysis, and as I was watching the video, I'm like, you know what? I'm going to make my own video of the top semiconductor companies to invest in, because once this entire disaster is over, and trust me, it is a disaster if you really look into what's been happening, there is so much short supply of so many things. There's so much demand right now worldwide, which is kind of like a good problem to have with all the inflation and the short supply bottleneck of things. It's just, it's not a very good situation overall, but it'll eventually sort itself out, in my opinion, but we'll have to see what happens. So I'm going to be giving you guys 4 names that I think are the best in class, A+, overall best investments in terms of semiconductor stocks for the upcoming decade, pretty much. That when these stocks go down, it's only an opportunity to accumulate them for the long term. And before we get started, if you're new to the channel, welcome aboard and hit that subscribe button. Here at Unlimited Options Investing, we talk everything from stocks, crypto, options, and we're investing for the long term. And as always, smash that like button, guys. Let's get started. All right, we're going to be starting off with the most obvious of the names. Number 1 is going to be NVIDIA. It is currently trading for $208 post-split. I think a few months ago, let's say July time, it split 4-1. So it used to be 4 times as expensive, and then shareholders had 1/4 of the shares. And looking at the past 6 months, so this happened around this time over here. And honestly, I thought the stock was going to sell off even more than it did. Similar to how Tesla and Apple did the years prior, because both stocks sold off right after they split in 2020, especially because NVIDIA had a really strong run between May time and into the summer, going up about 46%. And looking at the max chart, we said this one is a growth beast. And just to think 6-7 years ago, it used to be trading under $10, and now it's over $200. Unbelievable. And looking at Yahoo Finance, we see a market cap of $519 billion. A 52-week range of 115 to 230. Looking at valuation measures, we see that it has a forward PE of 44.5 and a price to sales of 23, so definitely not cheap by any measure. But that's usually the case when it comes to growth stocks. They trade at premiums because they're expected to grow more than the average company. But you have to be careful as an investor because valuation does matter. Remember, the higher the price you're paying, the more risk you're taking on. Looking at revenue estimates, they're expected to grow in 2022 by 54%. And 2023 at 12.8%. And looking at the balance sheet, total assets at $28.7 billion and total liabilities at just under $12 billion. And NVIDIA is supposed to acquire a company called ARM Holdings, and it's going to help NVIDIA a lot when it comes to AI, but I know there's a lot of backlash in terms of antitrust and monopoly and whatnot. And it's been going on for quite a while now, and the longer this takes, the less good I feel about it going through, but I mean, we haven't heard anything yet, but again, just stay tuned to see what happens with that. And the thing that's so great about NVIDIA is that they have their foot in anything that has secular growth over the upcoming decades when it comes to gaming, data centers, professional visualization, and autos and vehicles when it comes to autonomous driving. And chips are used more and more in cars right now because cars are advancing and using these more modern, these faster chips. They need these higher performing semiconductors, whereas in the past we only had, a CD player and a cassette tape, and then it started getting more and more. And then you had a screen, and then you had the rear view camera, and now all this fancy smancy stuff in cars. So when we take a look at NVIDIA on the candlesticks, we see that it has gone up pretty substantially over 2021, especially since May onward. So for that initial push from May until, let's say, mid-July or so, this one just went straight up. It didn't even touch that 20 EMA until it pulled back, and then touched right onto the 50, and then recovered, touched the 50 again, double bottom, and then went back up. However, now we've sliced through that 20 EMA and we've sliced through the 50 EMA. But again, the market has been pretty weak overall, so this does make sense. It isn't specifically just NVIDIA stock, but it is notable that this is the first time that we've opened and closed below the 50 EMA. However, the last time we did that was right before a big run, but we see that over here as well. The last time that happened, this just proved to be a good buying opportunity for NVIDIA. And again, this list, guys, is A+ companies. NVIDIA is A+. And if it dips more, buy even more, have your set targets. You can't go wrong with this company. All right, the next most obvious one is going to be AMD, Advanced Micro Devices. We mostly know this one as the turnaround play of the century or the decade or whatever, where it went from $2 all the way up to 105 that it is today. AMD in 2014-2015 was left for dead. Intel was the big player in the semiconductor space, and then entered Lisa Su, the president and CEO, who turned the entire story around. There are few people that I respect more when it comes to business than it is Lisa Su. So the first graph I want to show you is the market share between AMD and Intel over the years, and we see, especially in recent history, over 2017, 2018, 2019, that gap closing to right now, it's pretty much changing a guard. And AMD is taking it right over Intel. Right now, I just Googled best processor on the market, and this is the first search to come up. And from this first search, we see over here, what's the best processor for gaming? AMD Ryzen 9. Scrolling down. Best high-end CPU? AMD Ryzen 9. Scrolling down. Best mid-range CPU? AMD Ryzen 5. Scrolling down. Best entry-level CPU? AMD Ryzen 3. Scrolling down. Best gaming CPU? AMD Ryzen 7. And I know this is just one website, whatever, but this is how the majority think. When it comes to CPUs, it's AMD. When it comes to GPUs, it's AMD and NVIDIA. That's it. And taking a look at Yahoo Finance, so AMD has a market cap of $127 billion with a 52-week range of 72.5 to 122.5. Looking at valuation measures, it has a forward PE of 34.45 and a price to sales of 9.55. With revenue estimates of this year at 60.3% and next year at 17.3%. As well as total assets at just under $9 billion and total liabilities at just above $3 billion. And taking a look at the candlestick, so this one saw a huge run up back in the middle of the summer, let's say mid-July. So it bounced from the 50 EMA at about $85 and then running up all the way up to about 122. And then it pulled back to the 20 EMA at around 103 or so, bounced back up to 115, and now the market weakness that we've been seeing, we've pulled back below just the 50 EMA now and trading sideways in a channel right now between, let's say, this 110 mark and 100. So you definitely can't go wrong with AMD. All right, and the next one on the list, and I need to make a separate video for this company and do even more deeper research into it, but I know this one is a home run long-term, is not given enough love in general just because I think it's in Europe, but over time I think it's going to be turning a lot of heads. It's ASML Holding. And this one has been on a trajectory of its own, pretty much going straight up for the entire year, about 83% up. And even though right now we're seeing a pullback, I'm nibbling into my position. And what makes this company so special is that it's the only type of its kind in the entire world. And it's through a process called photolithography, I hope I'm pronouncing that correctly, as microchips are made by building up complex patterns of transistors layer by layer on a silicon wafer. ASML's lithography systems are central to that process. And this company honestly gets slept on, but if you take a look at the world map on Finvis, I honestly think it gets slept on because it's in Europe. However, it's one of the biggest publicly traded companies out of that continent. And if you look at any like iShares developed markets ETF, you'll see number one is like Nestle. Number two is usually ASML, and most people don't realize what it is or what kind of company, but it's a semiconductor company with huge growth prospects. So looking at Yahoo Finance, it has a market cap of $303 billion, and I know that NVIDIA and TSM, for example, and TSM is another foundry in Taiwan, are both over $500 billion. So this one is a smaller company relative to those ones. And it has a 52-week range of 357 to 895. And looking at valuation measures, we see forward PE at 37.55 and price to sales at 18.27. With revenue growth this year at 38.8% and next year at 18%. And looking at the balance sheet from the end of last year, total assets at $27.2 billion and total liabilities at $13.4 billion. And looking at the candlestick, so this one has had a pretty rough ride over the past month or so, but also when you take a look left at the graph, this one has pretty much been going straight up, either bouncing off the 20 EMA, which is the red line, or the 50 EMA, which is the green line. It would take 3 steps up, 1 step back, 2 steps up, 1 step back, 3 steps up, 1 step back, and so on. And over the past few weeks, as there's been a correction in tech stocks, this one's really fallen off from its all-time highs. But in my opinion, as a best-in-class stock, again, just accumulate as shares are lower. Even looking earlier back in March or last year in October or September when the price was under the 50 EMA, it just ended up being a solid buying opportunity. And even with this correction, I see nothing different, but just also be prepared that if it does keep dipping, to only keep accumulating shares. And the last of the bunch, and one of my favorite companies to invest in, Skyworks Solutions. Ticker symbol is SWKS. And this is a semiconductor company that specializes in radio frequency and mobile communication systems. Specifically, they make 5G chips for different types of devices, and one of their big customers is Apple, and when it comes to their iPhone, Skyworks is all over that. And half the people around us have iPhones, and they're upgrading their phone every few years, and iPhones sell like hotcakes, as we all know. And people are upgrading their phones, and Skyworks Solutions is making bank off of that. I think as the 5G revolution is just getting started, that the secular tailwinds are just beginning for a company like this. It's going to be showing in their stock price sooner than later. So they have a market cap of $26.56 billion and a 52-week range of $134 to $204. Looking at their valuation measures, they have a forward PE of 13.99 and a price to sales of 5.59. And I also forgot to mention that the dividend yields 1.39% annually. They're expected to grow revenues in 2021 by 51.8% and next year at 11.5%. And when it comes to their balance sheet, they have total assets at just over $5 billion and total liabilities at just under $1 billion. And when you think of 5G, you think of data on your phone or on your iPad or whatever, but it's becoming much, much more than that. And as we take a look, so first it used to be mobile, now it's going to become the Internet of Things, and over time, it's going to emerge into much, much more. Artificial intelligence, factory robotics, autonomous driving, smart cities, home fitness. The future is coming, guys. Looking at the candlesticks, this one has also been in for a rough ride as well, especially over the past few months, dropping from $186 all the way down to $160 to where it is today. A crucial support line that it last touched earlier this year, back in May as well as in March. And if we break down from this 160 support, we could fall down to 155 or even below that, maybe into the 140s. I'm not sure. However, in the short term, this could be a good buying opportunity, again, being on that support line, as we could recover back to these moving averages. But again, as a long-term play, I love this one. Just buy it on weakness. The same thing as NVIDIA, ASML, AMD. These are all A-plus companies, best in class. Accumulate, and hold. So many semiconductor companies and so little cash. And you could invest in an ETF like SOX, SOXX, which is the semiconductor ETF, or SOXL, SOXL, which is the 3X leverage version. And there's also names like Qualcomm, which is similar to Skyworks in terms of 5G, or Intel, where people think it could be a good turnaround play moving forward. Even though I'd just rather invest in AMD. But let me know your comments. What do you think are the best semiconductor companies? Do you agree with my 4 picks? Let me know in the comments below. As always, smash that like button, hit that subscribe button, and I will see you in the next video.